What's going on, everyone? Welcome to the Ben and Al Show featuring Ben and Al. Today, on our first episode, we'll be talking a little bit about market movements and just the recent events that we've seen in the markets. We'll also be introducing ourselves and going over some questions you guys had for us on Twitter. So, my name is Albert Reyes. I'm 19 years old, and I've been trading for about 2 years now. Started trading full time actually about a year ago. And from there, I've just been kind of going out into different ventures, crypto, NFTs, and whatnot. And yeah, just been very successful from there. Started my own service also about a year ago since I've been trading full time, and just been going from there. How about you, Ben?
What's up, everybody? My name is Ben. I am 25 years old. Unlike Albert, I am not a Zoomer. I'm more of a
He's a
millennial.
boomer.
What? Say it again.
He's a
That's what.
boomer.
No, 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 no.
He's a boomer.
No, I'm not a boomer. I'm a millennial. Get it straight. All
Yeah,
right.
yeah.
All right. All right. So I actually currently am getting ready to transition to full time trading. Even though Albert is a Zoomer, he did progress a lot faster in his trading career than I have. It took me quite a while to get to where I am. And currently, I do work in the healthcare field, and I've been doing that for a couple years. That is actually my area of study. Yeah, so I do like my job. Nobody wants to work a 9 to 5. I mean, even if you like what you do, you don't want somebody telling you you have to be to work at this time, you have to be to work at this time. So me transitioning over into becoming a full time trader, that's something I've always kind of wanted to do. And so that's really exciting that I'm actually getting ready to start this. And actually, I will be joining Albert as a competitor, and I will be opening up my own Discord service as well, and I'm probably going to steal every single one of his subscribers. Just
Yeah, it's
FYI.
not gonna be as good, but
Oh come on,
you'll
bro!
try.
Don't even. No, don't even.
You'll try.
All right, all right. Anyway, so we're gonna get on to what we think the market's gonna look like here in the very near future, and kind of things that we're looking at this point forward, Albert.
All right, so the market today was pretty red. We had talks about raising the debt ceiling. Congress is trying to get that raised before the deadline. And if we don't get that raise, we could actually be defaulting on the U.S. debt for the first time in history. So that will be a big headline surrounding just the broader markets going into mid-October, right? So we need to see how that kind of ends up, or if Congress can end up kind of getting that done and raising the debt ceiling, or what they're going to do or decide to do to make sure that we have some spending and we won't see a government shutdown. So well, we'll see what Congress wants to do there. Other than that, we had yields moving higher today, which caused a pretty bad sell-off in tech and growth stocks in general. And we have a lot of beaten down, broken down names today, and it's just really not what you want to see in the market. But we did see a character change in SPY, the Qs, IWM, and the Dow, just the broader indices. Um, it just kind of looks like market isn't really moving uh, how it's been moving since kind of like the beginning of 2020 after the COVID crash, where we basically saw almost every dip kind of getting bought up at the 50 EMA, at the 100 EMA. Now we're kind of seeing a different character in SPY and the Qs. We have a lot of fear surrounding different economic events. We have some tax hikes that we might see in the future with the new administration. Obviously, we have the debt ceiling talks. We had China with the Evergrande situation. So there's a lot of kind of headlines that are putting in fear into investors' eyes, or just traders in general. Everyone is kind of skeptical of what is going to happen. No one really has an idea of what we will be seeing into the end of the year. And that's why, in my opinion, we saw this reaction that we had today. So we're basically back at the lows that we put in around Monday of last week. So basically back to last week. We did nothing over that whole last week, all the way back down to the lows here. So we'll have to see if market wants to hold. We are at the 100 EMA on SPY. That is a huge level. We haven't really broken under that level since the election. So that will be a strong level there on SPY. The Qs were right back to the 100 as well. So Qs is the tech index. So we'll be watching to see if market can hold there. So really pivotal area for the broader markets to hold here. And if we don't hold, we could see a lot lower. Me and Ben were looking at some monthly charts, even the weekly charts, and we're seeing a lot of broken charts, and also a lot of ugly monthly charts with some bearish engulfing candles. And also the quarterly charts look pretty bad as well. So We'll have to see what the market wants to do. I'm not feeling too good about a bounce just yet. Like I said, I think the market character is kind of changing here. It looks like basically every single time buyers try to step in, we just have um, we just have sellers come in and basically sell almost every rip, right? And it's happening on pretty big volume. So there's a lot of people starting to get involved in these areas here. It looks like we'll say bears are coming out of hibernation here. So yeah, we'll see what the market wants to do. What do you think, Ben?
Yeah, so I kind of agree with you there. There's a bunch of fear, uncertainty going on in the market, and until it chooses a direction, I'm not going to choose a direction either. It looks like with with the debt ceiling and what the Democrats tried to raise it once already, and then McConnell from the Republicans, he denied it. So until that really gets established, and until the yields and everything, they really come to an agreement on how everything is actually going to, people are going to be certain on it's going this direction or if it's not going this direction. For me, it's kind of best just to sit the longer term time frame out and just kind of see what's happening right in front of us right now. But like you did say, the monthly charts, they're not looking too hot, along with the weeklies. And then we did see that what's forming right now, it is coming towards the end of September. So the monthly candles are almost done, and it looks like SPY is putting in a shooting star on the quarterly. So the quarters are coming to an end, and so that'll be really interesting to see how that plays out as well. But even though there is some fear and uncertainty going on, there is still a couple names that do show decent relative strength, um, mostly because of good catalysts like Ford. Ford is actually showing this is actually a play that I'm in, so it's actually good for me. It is a very good play right now. I have leaps, but it is actually showing really good strength, and those are the ones that you kind of have to look for when it comes to market sell-offs. Is look for something that is showing strength if you still want to play bullish.
Yeah, for sure. I agree with that. I agree exactly with what you said earlier on. I'm just looking at the smaller time frames right now, not really trying to swing anything just because we're not sure where the market wants to move. So I advise everyone else who maybe is a new trader or is not exactly the most experienced, just to try to sit out on the bigger time frames, try to keep things more on the smaller time frames. If you like to scalp or if you like to day trade, with or with market backing, that's something you could do. But if you're trying to play against the trend right now and try to time the lows or try to time the highs, you're doing it wrong because no one's ever going to know exactly where the market is going to move. You're not going to be able to predict anything. So you just want to be careful in trying to trade that way, because that's a really easy way to blow up your account, especially if you keep averaging down and whatnot. I know everyone's been through that, so make sure that you're not making that mistake. You're just trading with the trend, making smart decisions, and you can always sit out and wait for new opportunities to come to you. So that's definitely a good tip that you had there, Ben. And yeah, I agree with you, like you said, with the monthly charts. Those are looking pretty bad there on SPY. It does look like we will see a monthly bearish engulfing candle. I think for the um, first time since the COVID crash there, actually.
Yeah,
So
yeah,
that is something to watch for sure. If we do close the way we're closing right now, we do have 2 more days left in the month, so we could see a little bit of recovery. But we'd have to see some really some real serious recovery here on SPY and the Qs to not kind of put in this bearish engulfing here on the monthly. Also, if we look at the monthly time frame, still here, we could see the AEMA has held all the way since price reclaimed it back in the COVID days. So it held that one kind of pullback we had in October, and then it's been holding all the way up since. So we have to hold that level, which is right now about 420 there on SPY. So we're about 13 points away there. So that will be a huge level that I'm going to be watching to see if market wants to hold that area. And 420, that's gonna be a big area for bulls to hold. If we can't hold that, we'll have to see what price wants to do again. We're not trying to predict anything, but we just want to warn just in case we do see more downside here because the market is changing its character a little bit. If you follow price action, or if you have some experience and have been looking at just how individual names or the market in general has been trading, you can kind of tell that price action is looking a little bit different than what it has in the recent kind of year or so there. So um, yeah, that's kind of what I think the market kind of looks like. What about you,
yeah.
Ben?
So I'm gonna backtrack a little bit on what you're saying about trying to hit the bottom or trying to nail the top if you're trying to short. It's never, especially in times like this where there's like extreme like uncertainty, it's never good to try to bottom tick, and it's never good to try to top tick. If you are day trading, get in, get out. Get in with the momentum, get out with the same momentum. That's how I do it. Get in and get out just to secure the gains and just hop along until we actually get some movement in a certain direction rather than trying to trade all this uncertainty. But also what we're gonna get into is some Q&As that you guys had for us. We posted up a little thread on Twitter, and we had some good questions come through, and actually some really good questions. And we're gonna go over a few of them real quick. It looks like we got some kind of interesting questions, and of course, Squeezy started out the day with who would win in a fight between you two and why. This is a very fundamental question. This is something that really needs to be answered, especially in the first episode. We really need to establish dominance. And Albert, I'm sorry, bro, you would get
Yeah,
your ass
but
handed to you, bro.
however, this is a pretty easy question to answer in my opinion.
For who?
For me, I've been boxing for about 5 years now, so you're getting knocked out with a right
Bro,
hook.
I spar too. Let's get it any day of the week.
You're getting knocked out with a right hook. They call me the fuck, I don't know.
These nuts, is that what they call you?
Nah, they call me Canelo. They call me
Like,
Canelo Junior.
okay, buddy. Junior,
Yeah,
like
you get
junior, like.
you get knocked out. You get knocked
Okay.
out.
All right, all
You
right,
get
all
knocked
right.
out.
Squeezy, good question. I appreciate you. We all know
He
who the
gets knocked
winner's
out.
going to be.
Yeah.
Curly Gal Investor, longtime follower. Thank you. Uh, your advice to traders who'd like to transition to full-time day trading and leave the day job. Yeah, I'll take this one since I am currently in that same transition right now. For me, it is finding your strategy that works for you and making that consistent. Becoming profitable, watching your portfolio go consistently to where you feel like, hey, I could do this, multiple days a week and be okay. But it also is you got to find the correct budget where you want your portfolio to be, just in case anything does happen. You have something to fall back on. You can't just, get a small number and be like, hey, I'm been decently consistent, and then you have a really bad red week and your portfolio is trashed. So you really need to figure out what your budget is. There's different guides and stuff that you can look up of what people say your percentage of income should be, or multiply it by this or whatever. But everybody is different. Just really find that number and then really find the strategy that works for you. Make sure you're consistent and you're able to trade independently, which is a big thing, and not following others 24/7. It's never bad to take other people's advice, but you should be able to take your own trades, and that's a big part of becoming an independent day trader is to be able to take your own trades. Albert's already made that switch. I ain't worried about him. Um, Albert, what were your highest and lowest moments in your trading career?
My lowest moment was probably
TikTok
when
got shut down.
no, probably
Oh,
when I first started trading. I wasn't profitable right away actually. It was kind of like a little bit hard to get into options trading. I started out with trading equities, and then options was just like a little bit harder for me to understand. But really, after I got it down and everything clicked, I found a strategy that worked good for me. And after that, every single moment from there was a high moment, right? I was basically haven't really blown up any accounts like most people have while
oh,
trading,
okay.
which isn't like a flex or anything. It's just kind of what I have gone through myself. But it's just because everything clicked in the beginning and I started trading equity and kind of studied options for a while and whatnot before I got into it. And yeah, from there, my highest moments just probably just since I got everything clicked down, honestly.
But you heard what he said, though. He said he studied options before he started them, and that's a big thing. Coming from two option traders, he studied them before he started them. I did not. So my lowest moments was definitely when I started options, and that was a big turnaround for me. I actually had some very very red weeks before I really uh, was like, okay, you can't just be like, hey, this is going up. I'm going to buy a weekly call and hold it for 2 days. That just doesn't make sense. But you just have to study options if you, especially if you're going to get into them, and you want to do that as like a priority. So that's something that people really need to do. Squeezy. Also, how can I get more juice, bro? We got you. We will give you our energy. Do not worry.
The
Um,
energy is with you,
the energy is with
Squeeze.
you. It's free at that. TFO. What's up, TFO? When did you start feel like you were more consistently successful traders? Albert, you want to start out with this one?
Yeah, I started feeling like I was consistent when I was able to really perfect my plan. So, I've traded a bunch of different strategies, and all of them I found myself being semi-successful in. I was able to make money, but it's not until I really found that one thing that worked for me that I was able to build upon, where everything kind of really clicked for me. So, I definitely would say it's finding that plan, that strategy that works for you, building upon it, and really back testing. Everything your strategy and making sure that you're following the plan, right? Because it's one thing to actually have a plan, but it's another and probably the most important thing to actually be able to follow that plan no matter what happens. Worst comes to worst, you get stopped out of the trade, you take losses, it happens, right? You don't want to win every single trade. You want to make sure that you are staying consistent and you're keeping your losses small. But don't try to beat the market. Just um, try to become consistent, and you can utilize your plan and really perfect it over time, I would say.
All right, Albert, we got one more. I couldn't have said that better though. That was really good. But how did you come up with Wave Global as the name of your group? So Albert's group, if you guys didn't know, which most of you already do, his Discord is Wave Global Trading, and it is actually a very good Discord. Even though I'm going to clown him throughout this whole podcast, he does have a really good Discord.
Appreciate it. Appreciate it. Yeah. So, Wave Global was actually it was actually kind of built around Elliott Wave trading. So before I kind of got into trading more so, I used to always trade breakouts even with Elliott waves, but mainly trading just based off of just price action, not really using too many other indicators or any other noise. I used to actually trade waves. The reason I stopped trading it is just because I found that just paying attention to price and keeping everything kind of um, more quiet and just paying attention to how the stock is moving, really learning what price wants to do and how it reacts to different levels and whatnot and volume. I could kind of be one with the market in a sense, so I can really understand what is going on, why it's going on, and understand all the market participants and really kind of dive into how price is moving and why. So yeah, I mean that's why the group was Wave Global.
Okay, cool. Um, yeah, I don't care about that.
Okay, that's a good
All right,
story.
that was cool. Uh, all right, so I'll start with this one. I'm gonna put this one pretty simple. What's your favorite setup, and how do you scan for them? My favorite setup, along with most people's, I think, in option trading, is um wedges on daily time frames. That they're the most aesthetically pleasing, honestly, for the crowd. They're more predictable, in my honest opinion. But how do I scan for them? That's just me going through charts. As as somebody who likes to trade formations, you got to go in through charts before your day starts. You go in intraday. You go in at the end of the day. I like to do especially before the day and kind of get everything set up. But there's no automatic scan that I've found that is reliable. That's gonna scan for the wedges that I'm looking for or the triangles or whatever. It's just it's just my eyes, and this over time when you do technical analysis, that's something that comes kind of secondhand. You can kind of look at a chart without drawing any lines, and you can tell that hey, it's breaking out of this formation. But the lines obviously definitely help.
Yeah,
Uh,
that's exactly right. Many people will look for like the secret kind of tool to find different setups, but it's really just looking at a bunch of different names. I think that's what most top tier traders that I know at least do. You just have a big kind of list of names and tickers that you like to play and that you know that will move if that's the strategy that you like to implement. And you just scan through them, and eventually, like Ben said, once you have the eye for it, you'll be able to just spot the setup right away, whether it's on the daily time frame, weekly, whatever time frame you're using. So just scan through a bunch of different names, and eventually, I guarantee you that you will develop an eye for it.
all right, and next one is how do you find them? So we kind of just went over how you find them, but you did do. I'll kind of do a brief overview because I know Albert likes to talk about this. What is your filter settings? Other than my EMAs and SMAs, I don't really have any type of scans or anything that I use. Every once in a while, I use different scans on TrendSpider. But I do use FinViz, and that's how actually I find a lot of like those low key formations that I've never seen before. Yeah, I'll filter them by large cap, mid cap. Sometimes I have decent mega caps up there, but most of the time you've already known about those. So yeah, FinViz is actually a really great tool. I use that a lot of times to find those off the wall tickers that nobody talks about, but they still have decent enough volume. You can get a fill. The spread isn't completely terrible, and this is my favorite for any type of swings.
Yeah, I don't actually use filter settings, but I do like to use one type of, I guess you can call it scanner. It's on MarketSmith by IBD. So they have a section where you basically scan for strong fundamental names that have very good growth. And I usually just look for areas of consolidation. So stocks that have been kind of basing for a while. If you have a lot of consolidation, usually you have institutions accumulating a position, and once you have a breakout, you usually have an institutionally backed breakout, um, which are the breakouts that I usually like to play. And yeah, you can use MarketSmith to see institutional fund ownership or if it increases or decreases throughout the quarters. And it's just a great tool to be able to scan for a strategy called Can Slim. If you guys want to do a little bit more research on that, or we can talk about that in another episode, go a little bit more in depth. That is kind of the area that I look to trade. So high growth names with strong fundamentals, great technical charts with really kind of tight consolidation areas, and also names that aren't really as known. A lot of people focus on really kind of the mega caps, right? The big growth caps. Those sometimes can be a little bit crowded, especially if you see a lot of the setups on Finwit. Um, and those could really fail and trap you because so many people are watching, right? There's so many eyes that you think that that's going to move because everyone's posting it, but usually it's kind of the opposite and you don't really have as much follow through. And there's been great examples of that. So yeah, I like to kind of look at the low key um, kind of names, just make sure that they have high liquidity still and good open interest, obviously. But yeah, really that's kind of what I like to look for. And other than that, just scanning through a bunch of different names on a list that I have um, of names that I just like to trade in general.
So hold on, I want to bring it back a couple sentences. Did you say Finwit?
Is that one not the name of it?
Bro, that's
What's
I mean, unless I'm wrong and I'm about to be wrong to everybody,
FinTwit,
it's
Finwit?
Finchwit, bro. Financial Twitter,
It's the
bro.
same
Come
thing.
on.
Yeah, but it's the same
Look at our
spelling.
group chat. The
Finwit.
Lords of Finchwit.
No, I mean Finwit. Like
Is the T silent?
no, it's not silent. Finwit, like with the
Okay,
T.
maybe I'm wrong. Maybe somebody can DM me and correct me after this gets released. I don't know. Well, I'm gonna go ahead and move on. What is the most effective way to find best supply and demand zones? Some traders are insane at predicting them. That is all to me. That's all historical price action, and I do. I love historical price action. That's my favorite thing to go off of, and that's what a lot of my setups are based upon. I like to find the same trend that's happened multiple times in the past, because if it's happened before, it's the chance of it happening again is higher because it is proven to happen once at least. But Albert, I know you're big on big supply and demand zones.
Yeah, so supply and demand zones, depending on how you view them, for me, the idea of supply and demand zones is finding where the institutional orders are. So I like to find areas, usually dojis before a big move. So you really want to just look for consolidation areas before a big move, right? And in that area, there's going to be either a lot of supply or a lot of demand, depending on where price went. So if you have some consolidation and then you had a big rally to the upside, there is some leftover demand there, right? Because big money has to fuel the move. Retail doesn't have enough buying power to really create those huge moves. And usually, where the big moves start, that is going to be institutional money that is in that area. And since there's not that much liquidity and institutions have a lot of money, um, their whole order might not get filled right away. So they have their orders set in those areas, and then price moves up or price moves down. Depends on what order they have, and there's some leftover supply or demand, right? So price revisits that area, and that's why you get those buy orders getting filled, and that's why you get those nice bounces up and down. So you can use that as a possible way to, I guess, time the bottom, time the top. You don't really want to always look to time the bottom, time the top. Make sure that you're using other conformations, but supply and demand zones definitely very useful in finding areas of high liquidity and really kind of seeing where institutions have their buy and sell orders.
Also, I want to go back to what he said originally is how you view them, and what a lot of people don't understand when it comes to technical analysis, it is completely subjective. So I mean, you may see something that somebody else doesn't see, and that's all geared around how you view it. And so that's what I like to point out to people, because some people will say, "Oh, the support is exactly this penny." Well, I mean, not necessarily. The support is that zone, but it just depends on how you view it, and that's what technical analysis all it comes down to, because it's usually just zones of an area. It's not exactly 99% of the time. It's not that exactly trend line is means exactly this. It just depends on how you look at it.
Yeah, exactly. That's a pretty big misconception. Some people think that you need to tick to the penny or whatever and whatnot,
Right.
but there's always going to be buy orders. There's always going to be sell orders everywhere.
Right.
It's not just on the chart, right? It's
Yeah.
on the tape. People are going to be buying different areas. Not everyone uses technical analysis and looks at the exact level. So everyone trades in a different way. There's so many different strategies and whatnot. So many different perspectives. You never know what someone is thinking and whatnot. So yeah, it's very subjective. And you can whatever you view and whatever strategy that you have, if it works for you, that's really all that matters. As long as you
Yeah,
perfect
that's
it, get it
right.
down, and get everything going. So yeah, hopefully everyone enjoyed the first episode. Ben, do you have anything to finish us off?
Yeah, I'm gonna add on to this chocolate milk question real quick. Have you ever noticed that the same grocery store stuff, the chocolate milk has a closer expiration date than the white milk? Thoughts? Well, the chocolate milk, I think it's the sugar content, if I had to guess. But they
I
want the
have
chocolate
no
milk to
clue.
get bought up, bro. That stuff's good. Have you ever had Fairlife chocolate milk?
Never.
It
I don't
doesn't
drink
matter if the
chocolate milk.
expiration date is the next day, bro. That shit's gone instantly. It's like Hershey's milk. It's good. Anyways, yeah. So that's pretty much the whole beginning of our podcast. That was just kind of a brief introduction of what we're going to be offering, throughout different areas of the market, kind of covering the ups and downs, the highs and the lows. Um,
Yep.
but yeah, this is pretty much is going to be how our podcast is going to run. We're going to get some cool people up here. Yeah.
All right. Yeah. Hopefully you guys enjoyed. We'll catch you in the next episode. We might have some really interesting guests on. So yeah, hopefully everyone enjoyed, and we'll catch you guys on the next one.
Cool.
See
Deuces.
you later.